Next up is our multifamily broker, Alan Mendelsberg. Alan's a partner with Cushman Wakefield Picor, specializing in multifamily and investment sales. And he also graduated from the University of Arizona in 2008.
Good morning. I'm going to first run off and bore you with the stats for multifamily. Our two main indicators, vacancy rate and average price per unit, continue to stay stagnant. One quarter they'll go up a little, the next quarter they'll go down. At the end of the second quarter, the current vacancy rate for apartments 40 units and over in Tucson was 8.9%, while our average price per unit on your individually metered unit was $642. We continue to see very stagnant levels here in the marketplace for both those indicators. Next, I want to run through a few trends in the market. Ross already told you about the deal of the quarter, maybe deal of the decade we'll have here in Tucson, so I won't bore you again with that. But on a positive note, investor interest could be at an all-time high. Usually during the summer where I'm out on the golf course and in the swimming pool, I'm actually in the office working, which I'm not a huge fan of, but investors are calling me on a daily basis. We have numerous exchange buyers coming from California, Canada, Mexico, looking to place money here in Tucson just due to the cap rates that we currently have. Really, the cap rates are what's pushing pricing in this marketplace. Profit and loss statements on average are about the same or declining on most of the properties I look at. The investors are here because we base our P&Ls on actuals. As where you look in Phoenix, your profit and losses are based on inflated pro formas. So that's one positive Tucson has. A concern that we're starting to have is security deposits have begun to shrink again. And this is coming from numerous management companies around town that now they're starting to have to go back to the $99, $199 security deposits to bring tenants in. There's a very price sensitive market, the Tucson marketplace is, and $15, $20 makes a big difference to a lot of the tenants out there. With these smaller security deposits, we're seeing a big increase in repairs and maintenance budgets on a whole for most of the properties that we tend to look at. This is definitely a concern. I think it has something to do with Tucson's growing low to low middle class population that we currently have. With this growing low to low middle class population, we are very fortunate enough to have a nonprofit come to Tucson this year, and they are looking to assemble 600 units. Right now we picked up about 200 units, and this nonprofit deals strictly with most of the tenants that your traditional management company wouldn't want to deal with. Whether you have a nick in your credit report, criminal report, they're doing the hand holding that is really necessary to help these tenants out, and they're going and they're finding properties that are underperforming, have built up deferred maintenance, and they're going in and they're putting in the money. So very lucky. They're saving a lot of the owners that are that have been under the gun and have been barely able to survive. So we're very, very lucky to have them here in Tucson. Other than that, things tend to be the same. There's not a huge difference. If you take out Ross's deal, we're right on pace for as far as transaction velocity here in Tucson. Take out Ross's deal, first half of the year we had about 15 transactions. Ross pushed that up to 23. But I expect to see an increase in velocity over the next few years. A lot of the properties that were purchased in the peak of the market, 05, 06, 07, 08, are starting to have their 10-year come up, and a lot of owners are faced with the decision of trying to refi if they can, or they're looking for other alternatives. So banks are contacting more and more often on distressed properties.